Hi traders, this is Houston Trong from TradingEdge.org, and here is your weekly market outlook for May 13th to the 17th, 2019. So what a week it was. If you were to sum up this week in a couple of words, you could say headline risk. And that was really what was moving in the markets this week. The markets ended up putting in the worst week of the year in terms of losses. And a lot of that was due to the uncertainty around, of course, the talks between the US and China and tariffs. So we had quite the volatile week this week, ups and downs. Interestingly enough, most of the time the markets were open in the US, they were up. However, when the Asian markets opened up and they took over, and the markets slid down. So definitely two different perspectives from across the pond. So let's look at the charts now and see what happened during the week. A lot of things that we had warned about came to pass. So now let's take a look and see where things can go and what we need to look out for the coming week. Don't forget once again that we still are in the middle of earnings season, and next week is no different. It's a busy earnings season, so keep your eyes open on some of those big names reporting. For instance, Baba reporting on Wednesday, and we got big names like Nvidia and Walmart, Baidu reporting on Thursday. Sure to be interesting to watch those names. So let's jump into the charts now. And a really good chart to sum up the volatility and the very back and forth nature of volatility this week was the VIX contract. So VIX ended up going down over 7% on Friday, but it did not look good earlier in the week. So let's zoom in here and let's talk about what we have in the VIX now. So on the 3-month chart, once again, here we are, right? So there's the outside. There's the inside bar and down. So the low of this quarter, and I give a mid-week update on Wednesday about the condition that VIX was in and some of the indices. But the message was this, right? So if the VIX can stay below 28.19, that's the low of 28.12. That is the low of the previous quarter, and if it can stay below 28.12, then this inside bar and down condition is in force. They closed it right at 28.19, so we're very close now to being in that situation where you have that the inside bar break still being valid. At one point during the week, we were trading way up here, so we had traded way up here. We managed to climb our way up here, and then had turned the entire quarter green. But in the last 2 days of trading, they sold off the VIX back into the lows again. So very interesting situation there. So on the VIX 3-month chart, we have that outside inside, but it's not down. It's trading back inside of last quarter's range. On the monthly, green on the month, right? So here's the situation now where you have it trading green on the month. It was a green week, even though they sold it off. You can see the green week there. Yeah, we had a few red days, but it's still trading. Importantly here now, it broke back below the quarterly open. There's that blue line right there in the monthly chart. It's trading back below that quarterly open. So you don't have full time frame alignment. We were talking about this in the earlier video of the week that when you have VIX trading above those 3 levels, the quarterly, the monthly, the weekend, then it's open season on the VIX. And we had that situation for a few days. So for instance here on the daily chart now, let's go over the daily. Oh, excuse me. We had some really good trading here when it popped above on Monday, above that quarterly open. Here, it had an over a 16% jump that day. Then this was a Wednesday. You had the inside day, which resolved to the upside. It opened, it gapped up, and pretty much it gapped up, and it started selling off very quickly afterwards. Because if you take a look here, these little red lines that are horizontal, these are the gaps that were previously unfilled. So we had a gap right there that got filled very quickly. That's on the Monday. Then there was a gap right here at 30.19 that got filled on Tuesday. Then on Wednesday, they filled this gap right there at 32.24. And ultimately, this last gap right there, 33.23, was the area where people actually unloaded a lot, and they got that gap fill. And once it tapped that level, it got up to as high as 33.29. That was it. There were no more buyers at that point, and they just fell down from there. If you actually take a look, it's a very interesting chart. So let's zoom into that. So we know the gap there's at 33.23, right? And so after the 33.23, let's go to the daily chart. Let's go to an intraday chart for a second. So 33.23 is the gap. Okay, so there it is. So there on Thursday, you get that gap up. We have goes up 1 bar up, so you know it's gap and go. You have an inside bar consolidating there at 10 o'clock. Then you have boom, the outside bar. The outside bar taps 33.23, goes up to 28, and then it pulls back in. Then you get the change of the hour. So this is 10:30, and this is why time frame alignment is so important. So once the hour changed, then everything changed. So for instance here, it goes outside bar and down, right? So it goes outside bar and down, comes back up, cannot break that hourly open. So you can see that red line, that's the hourly open. It goes outside bar and down, comes back up, puts another outside bar inside. There's one of our favorite patterns, outside inside, and then gone. It just sold off now for the past 2 sessions. If you look at the hourly chart, it looks like this. So there, gaps up, okay, gaps up, hits the 33.23 in the first hour, goes inside bar in the next hour, and then inside bar and down, and it's been going down since. So just keeping on the hourlies could have given you a lot of information about the direction of the potential indices. So here's a great pattern that happened on Friday. Okay, so here's Friday. It looked shaky here because it went outside bar and then it popped up, right? So this is quite volatile. It's an hourly chart, so it doesn't look too volatile, but on the indices, that means you're selling off. Then it goes outside bar up, and then once it breaks below the low of this bar here, we know the situation, outside bar and up. Once it cuts through there, it's going back down. And they just kept on selling it. So this turned into, if you recall now, let's go back to the 2-day chart in this chart, but over here, this turned the daily chart into an inside bar reversal, right? So once you had the inside bar break to the upside, you know, that's bringing in all the momentum traders. But once they take out the lows of that bar there, it's an inside bar reversal, because anyone who got long on the sequence is likely to get stopped out. If you put your stop there, you get stopped out. You put your stop there, you get stopped out. And I think they may have taken out this one. This is the low of 28.14. Did it get down there? 28.19. So 5 cents away. I'm sure the guys who you know, are long here and they put their stop there, they're really hoping they don't get touched, you know, next week. So we do have an unfilled gap right there. Okay, so here's a gap right here now at sorry, this is the gap as opens here at 27.96. So do the sellers come back in? You know, there's some sort of positive news come out of the trade talks on over the weekend, you know, sometime to the coming week, and now we take out this unfilled gap that is now there. Let's change colors on that one. Let's give it a nice green. Unfilled gap. So now let's watch that level, 26.86. Does that level end up getting touched if they break the downside? If they break the downside, this becomes a very likely target to go after. So that's when you're going to want to see, you know, can we break below here on Monday? Below this purple line here is your weekly open. All right, so wherever this thing opens up next week, it's going to put it in that range, and then are they going to go for that gap fill or not? Then you have another gap down here, right? So another gap right down here. So let's draw that guy again, right there. 25.42, and the 25.94 area was the previous all-time low. So that had been the previous all-time low, and it's kind of been an area that the VIX has had a hard time staying below, right? So there's 25.94. Once you broke below it, it's just been doing a little dance there, and then finally, you know, it popped it back above. So can they keep it below that 25.94, or just an area that becomes again hard to break down? So let's go on to the SPY, because that's basically the mirror reversal, although very, very volatile. So SPY, back on the 3-month chart, it looked quite gloomy for the buyers earlier in the week, and then things certainly rebounded, but still wasn't a great week overall. Still a red week. So here's the pattern, right? It was inside quarter and up. The thing is that for this inside bar to stay in force, as I had mentioned with the VIX product, is that it has to stay above 285.18, and they were able to break it and keep it actually above there to end the week. During the week, intra-week, it was actually trading below the 285.18 area, but you know, by the end of the week, they were able to break it back above. So there, our 3-month bar, they defended this area here, the blue line, and now that signal is back in force. Not only did they defend it, well, not only did they defend that, but they managed to look at what we have here. This red line, 282.48, is actually a gap fill. So going on the daily chart for a second, sellers pushed it all the way down, to break the 285.18 area, but then they gap filled it, and that's where people took profits. The shorts took profits at that gap fill. Look right there. It got as low as 282.30, and the gap fill was 282.48. Right, so there's your gap fill, and then it pops back up right away. So, Friday, that was really the move. Once they filled the gaps and scared the majority of participants, then it popped back up, creating this inside bar reversal situation here, right? So inside bar and down, okay? And then broke down further, outside bar comes back up and stops anyone who may have gotten short. So now they're going to go after that pivot there come Monday and into the week. So watch that once again, how they deal with that, because now we have an outside bar, right? So the outside bar, and look at this broader pattern, right? So there's our broadening formation pattern. Here's the ascending trend line, pops right against that and pops back up again. So once again, these areas are acting as support, and you're still, this little blue line here is your quarterly open. So there's your 3-month open. They defended that area as well. We talked about that as well. The 3-month open is right there. They had turned the quarter red for a brief moment. We had moments on Thursday and Friday. We traded below that quarterly open, but each day it's closed above that quarterly open. So that's quite significant. So the issue here now becomes, that's the first target they're going to go after here is this pivot there. It's very likely. It all depends on what kind of news we may have over the week and what kind of headlines develop. But the issue here is that even if we pop up on Monday and into the coming week, is how do we begin to navigate the fact that the month is up here, the monthly open is up here, right? So you're going to have a situation now, even if you open up green on Monday, let's say you open up green here, you're going to be sandwiched in between the monthly open and the weekly open. So you have this big range here now where you're kind of in no man's land because you have a conflict of time, right? So on the monthly chart, look, you have a big red month. Okay, so you have a big red month, and there's nothing you can do about that right now until you take out the highs of the open. That's up here. So in order for the charts to look good again, you have to push it back up here and stay up there. Otherwise, you're going to have, no matter what, you're going to have an outside bar in May. That's the outcome of what we've had so far when we take out both sides of the range. The only question now is it an outside bar that's dark red and down here, or do you have an outside bar that's maybe a bullish hammer, or even a big green bar if you can crack above the monthly open? So those are going to be your 3 different possibilities, right? Big green bar, big red bar, or somewhere in the middle where you kind of have maybe a bullish hammer if they can close it near the top end of the range. So that's the situation now for May, and that just means it could be choppy trading, as now you're kind of inside the situation where you're going to be bouncing around between the monthly open and possibly something that's lower down here. Maybe that was the low for the month. We shall see, right? So let's go on to the things that are objective. Let's talk about the Qs now and see what happened there. Very similar situation with the Qs. 3-month, they defended. So outside, inside, and up, they defended the level here of 182.83. They came back below it. They defended it, popped back up. Signal is still in force. Now, on the Qs, they did something very, very similar. So on the daily chart, what we have here is a breakdown, inside bar and down, and the gap fill them. So there was a gap there. Okay, that was the gap that needed to be closed, and it finally got closed. 182.41, I believe, was the gap. Right there, right? 182.91. Is that the right gap? 91. No, that's not the one. Here. Let's see here. All right, so that wasn't a gap at 182.73. So that was not a gap there. What we do have here is a gap there at 179.66. Okay, so 179.66 is our area that needs to still be filled if it comes down there. But there's a quarterly open in blue. So there's our quarterly open. It touched it, right? So they touched that quarterly open and they popped it back up again. So the buyers defended that area and they kept that signal, the overall signal, still in force. So the issue here on Monday is you have this outside bar in the daily. It did create an inside bar reversal condition here where inside bar went down, but the buyers brought it back up again. So just like the SPY, they're going to go after this pivot high. The issue here is that's an outside bar. So what do we need to know is outside bar and up, outside bar and down, or outside bar and inside bar come Monday, right? And then you're going to react differently to those different 3 scenarios. Remember, the outside bar is a momentum type of situation here because your people are getting aggressive on both sides. So even if they go outside bar and up, you need to make sure it doesn't come back in again. Because let's say on Monday it goes outside bar and up. If it's weak, or they close it up here, and all of a sudden on Tuesday, Wednesday, for the rest of the week, it comes, if it gets back below the breakup, the bar that goes up, we know that outside up and back down pattern is very common, because that means momentum has died and people are going to come back through the other side, like this here. Like we happen here, back on the 20th, goes outside bar and up, looks great, right? This looks amazing. Then they take out that low and that looks terrible again, and they take out everyone who got long in the short term. So then they take out all those lows, right? But we're still in an uptrend here. But we need to be watching out that these short-term moves, because of the headline risk, can definitely take people out on both ends. So we need to keep our eye on that. On this, having outside bars is great. It's, they call them bullish engulfing bars. But again, this doesn't mean it's a home run, because you still need to watch out how the next few bars play out. All right. So let's talk about Russell. Russell had a pattern that finally played out. We've been watching that for a while now and alerting to the danger of this, but it did fill the pattern. So Russell has not been able to close on monthly chart, has not been able to break and stay above this inside bar. So this inside bar here broke to the upside, closed back inside the range. Try to break it above, again at 158.78, back into the range, right? On the 3-month chart, we have this inside bar and up pattern, also has not been able to stay above it. So these signals are not in force. So the Russell is actually weaker because it hasn't been able to kind of lift up and take off. So it's coming back into the range each time you think there's going to be a breakout. There's a lot of fake breakouts happening in the Russell, and I'm sure getting some people trapped in there. Not trapped, but they're getting them stopped out. So on the Russell, again, you have to get above 158.78 for the signal to basically stick in force, but it's not doing so right now. So on the weekly, this is what happened. We had this outside and up situation play out. So this is what I've been warning about here, is you go outside and up. So this is a momentum bar. It looks great, right? You have an outside bar, which is, you can call it a bullish engulfing bar, whatever you want to call it. Fact is, it's just an outside bar. It just, takes out the range. That means it's, its high is higher than that bar's high, and its low is lower than that bar's high. Outside bar and up, right? Then this week here, at one point, it was, if you recall on Monday, we had that big volatile day on Monday where things gapped down and they bought the Russell and it created a new high. It created a new high there, well, higher than last week's high. And then as soon as it started to come back in, that was a signal of lost momentum. And as soon as it came back into this range, they started selling it, and it went through the entire prior week's range. So that's the potential there, is that when this thing comes back through the range here again, it can come out the other side. So anyone who got long in this last week's sequence, or this week's sequence, they got stopped out if their stops were there, because they took out everyone's lows from this week, that week, and that week. They touched, look, the quarterly open. This is the significance of watching these things, right? And they've maintained it now. So right now we know that the 3-month open is still, it's still green, because it's trading above that 3-month open. Now on the daily, we have the gap fill that took place. There was a gap fill that took place on the Russell there, right there. So here's the gap fill. It was at 155.23. The gap filled it on Thursday. Then on Friday, came back up, create the outside bar. Again, same condition as SPYs and Qs. Inside bar reversal. Now you got to see how it can come back up here and trade, and perhaps trade out and take out this pivot here. But once again, we're stuck in between this monthly open. We need to take out that monthly open to make it a green month for things to get really bullish again. If you want that. If you don't want to be bullish and you don't want them to take out that level, right? So we need to watch for that. The issue here now is, can they continue to march it down? If it trades below the quarterly open, then you can really get aggressive with your shorts. But right now, you're kind of in that mixed environment now, where you have things trading above their quarterly open, but lots of them are trading below their monthly open. So you have that time frame conflict. Okay, let's talk about Dow. Okay, Dow on the 3-month. So outside, inside, and up. Could not stay above this area, right? So could not stay above the inside bar condition. So the signal is not valid right now. It's not in force. So for the time being, well, if we look at the monthly chart, this is the issue with the Dow. Oops, sorry, I jumped over to the symbol. Let's go back to our Dow chart on the monthly. We created an inside bar reversal. This is quite bearish. So inside bar up, right? And then when they broke below the low of last month, 260.58, they turned it to an inside bar reversal because people are starting to get stopped out here. So it came down as far as here, but the immediate target now, if you're short, is that low right there, right? So if people continue to press their shorts, and rightfully so, because Dow, unlike the Russell and the SPYs and the Qs, it's actually trading below its quarterly open. So this is actually the weakest of all the indices right now. It's quite the flip because we came really close to hitting those all-time highs, right? So that's that blue line there, just 2 weeks ago, right? So we came really close to hitting those all-time highs right there, back on the 22nd of April. But now this is actually looking quite bearish unless the bulls can somehow push this thing back up above the quarterly open and above back into last month's range. But right now the strength is on the seller side for the potential to take out last month's, or excuse me, March's lows. Okay, so that's the target if you're short, because you're trading below the monthly open. It's a red month, obviously. You're below the quarterly open now, and any red days, that means you're it's looking red, right? So weekly red, day red, month red, quarterly red, you got full time from alignment to the downside. So then you have full permission to short Dow stocks and Dow and the Dow itself, because a lot of the Dow components, especially Boeing, the hits keep coming out for Boeing. They don't look good, right? The stories aren't getting any better. So continue to watch for that headline risk. So on the daily, you have that inside bar reversal condition, like everything else. The difference again on the Dow is that you're below those key levels. So the Dow, again, the weakest of all the indices. Let's talk about UKOIL real quick, the oil chart. So oil chart still playing out here. It's pulled back in a bit, but the outside inside bar condition and up is still in force. It's still above last quarter's open. So although oil has been kind of shaky to the downside, it's not giving up the gains that easily, right? People are definitely, holding in here. And if you look at the weekly chart, even though it's a red week, it's kind of a, doji. You can argue it's a bullish hammer week. So the buyers definitely stepped in there because we had that one really big selling session on the Monday, right? But then we were met with inside bar, and they bought it. Look, outside inside broke a bit to the downside, and there's your, if they break above this inside bar here, there's your inside bar reversal. So this is a very big sequence, but it's an inside bar reversal sequence here. Outside inside down, they could not break it lower, and then finally on Friday, pow, they took out that high. Now they're going after these highs once again. So this is still something that looks strong, although the monthly open is right there. So you want to see it break above the monthly open, which is very possible now because now they're going after these pivots. That could turn this thing back green again on the month. So UKOIL still strong, but we're basically two weeks into May, and it's still a inside month. So after last month's big month, 6% month, would not be surprised for this thing to perhaps have an inside month. We'll see what happens. 2-day chart, consolidation, right? All of this stuff here looks like 2 inside bars on the 2-day chart. So basically chopping around, right? Not doing a lot, which is probably what you want if you're a bull, right? You're not the buyers have not been able to step up and break it down. In fact, all we're left with are these inside bars. All right, quickly now, let's talk about long bond. So long bond still doing its inside bar action on the monthly chart. Outside, inside, it tried to go up, right? It tried to go up. It managed to break above last month's high, but came back in the range. So this signal's not in force, and you're still trading below the quarterly open, that blue line there. So the bonds, the bond buyers had their chance here, but look at this on Monday. So there's your gap up. It's a red day. It gaps up, but it's red. So it's still a green. It's still a positive result, but it's a red day. They sell it pretty much the whole session. That's your only green day of the whole week on Tuesday. Okay, so you had that day on Tuesday, then Wednesday outside bar, red bar. So bonds, even though it's climbing up high, each day is met with selling. So it's quite the interesting situation there. So I'm still, this bigger pattern is still in play. Outside bar and up. Now, if next week they can begin to break things back down again, it's still possible to get back down to that level. But again, because you're sitting in this inside range stuff here, it's very choppy trading. So not a lot going on with the long bond, which is probably a good thing. Because if people were really rushing to safety, then you'd see the long bond stay up and go up and stay up. But right now, it's very uncertain right now. So this is when it's good to either be a short-term trader or to stay light in your feet because, it's hard to have any real conviction with all the headline risk and the conflict in timeframes. So, and I'll just add, it's very hard to be a quantitative trader as well. So if you're a quant, and how do you model in some of these headline risks? How do you model in Trump's tweets at 2 o'clock in the morning or 5 in the morning? This is stuff that's again happening live in real time, and it's very hard to back test this stuff. So this is a very interesting time to be living through. Now let's go to EEM, the Emerging Markets ETF. And this past week, it looked more like the Submerging Markets ETF, because this thing was, they were selling it off at various points throughout the week, and it looked bad. And it did hit the targets that we had mentioned on earlier in the week, earlier last week. I said, watch 43.35. I said, watch that level, because on the monthly, there's your outside bar and up, right? If it breaks below 43.35, it's open selling season on EEM. And so that's what happened this week. It broke down below on Monday. Okay, so here's your Monday. It broke down below, and they bought it. Remember, so on Monday they sold it off, they gapped down in the morning, and they bought it back the rest of the day. Now here, they were not able to actually close above 43.35 to close the day on Monday. And the next day, bam, gaps down, wipes out anyone who got long that, trapped them in there, and then sold off for the rest of the day, up to 2% that day. Quite a bit for emerging market ETF. And then finally, it keeps selling, and you get the completion of the pattern, right? Outside and up, and they're going after that pivot and then that pivot, and they got them all. So anyone who got short or who were long that sequence on the monthly chart, they got wiped out. So these two guys, you put your stops anywhere there, you got stopped out. So you're left with an inside week and down on EEM. So continue to watch EEM here, right? So you want to see, do sellers step up, and it all depends on the talks, right? This is very, very tied to the talks and and tariffs. So can they push it through, right? Because if they get aggressive, we have full time frame alignment now to the downside on EEM. So red month, red quarter. If you have red weeks and red days, once again the trend is to go down, and perhaps take out these lows down here from last year. Bitcoin. Man, Bitcoin is on a roll. We've been talking about this for a while now, right? So I hope you got yourself some Bitcoin, because this thing is going up. Now it's funny enough, right? So if I go on the 3-month chart here, I've been saying 77.88 as a likely target. And when I set it down here at 42.10 when I bought it, it may have looked really far away for you, right? When you looked at this chart like that, you'd like 77.88. That's way up here, right? There's that bar right there. But now look at the bar, right? It's at 68.76 as we speak. We're only, I thought $900 or 900 points away from this 77.88 level. So this quarter alone, it's gone up 65%. Okay, and that's the opportunity and the risk, of course, in Bitcoin and cryptocurrencies. And that's the pattern that we talked about, right? So it's all started from that that monthly chart, outside, inside, and up, and there's your nice 60% gain from that breakout. As I mentioned in last week's video, how do you get in on this action? And so you have to think about it. If you don't want to be trading Bitcoin very actively, then you have to decide how you want to get in on this stuff. So last week, Bitcoin went up, and then I happen to know some people who try to short this, and I was warning this is a very strong uptrend, and you may not want to try to short this move. And so if you did short, you had that opportunity here. It hit some levels of resistance from the previous levels where it broke down, right? So if you look at the weekly chart, you could argue, well, it broke down from here, and you expect a bit of a pullback. The fact that there's no pullback at all just shows you how strong this move is. So you had this pullback, which turned to an inside day, then it went inside day and down. But it's still, again, all the time frames, it's up, right? So it's up on the quarter, up on the month. It was down on the week for a moment here, right, on the 6th. But once you take out that high, there's your inspire reversal, and bam, there's your buy signal, because you can buy above right there, and it's gone, right? So if you want to get more active, like I always mentioned, the 12-hour chart is a great alternative. Because if you can take the daily, of course, that worked out really well. But on the 12-hour, there it is. So you can take that one, or you can take something like this one here. So there's your inside bar and down. So if you missed the daily chart, you can take another one here on the 7th. I think that's the same. Is that the same signal? No, slightly different signal. Yeah, it's the day over here. So inside bar and down, same situation, reversal. This is what you want to be doing. You don't want to be chasing highs all the time. If you chase highs, you're going to get stopped out, right? If you buy up here, it's going to pull back. So wait for the pullback, okay? Then you're buying the high of that, and then it's gone. So you're risking very, very minimally. So I'll just draw in the risk to reward here. Okay, so you put your low and your high. Okay, so the low is your stop, the high is your entry, and look, it's already moved close to 5R on that move. So very, very nice move on Bitcoin. Really quickly on the cryptocurrency markets, very, very strong. Nothing much to be said other than it's a buyer's market. Don't try to short this thing yet. Although it's getting more parabolic now, so this might be an opportunity now, but we want to wait for the price action to dictate when to get in. So there you go. Total is a measure of all the coins, and this thing is inside bar and up, started the whole move on the monthly chart. There it is. You're expecting this high to get taken out. This one here. Okay, so that's the pivot they're going after right away. And at this point here, you want to be buying pullbacks. Ideally, you want to be buying steeper pullbacks, but the markets have not been giving you a choice right now. Okay, just a few more names to catch you up on. So I gave you a few names in the past to look at. GoDaddy was one of them. So GoDaddy, because we had that outside-inside condition to the upside, it's back and forth again. So GoDaddy here, if you take a look on the 2-day chart, could be an inside bar reversal trade forming here. And it would be interesting to get it back up here again for it to come back and perhaps Tesla's monthly open. Okay, Cboe, another situation where we have an outside inside on the 3-month chart and up, very strong. So even with all that pullback, even all the tariff chatter has not affected this stock whatsoever. They did an outside bar on Monday, and then look, it's just been slowly grinding higher. So very strong name so far, Cboe. Play, I'm actually long this one myself. Outside, inside, and up, and Play's been having, it's basically going, it's very tight trading right now. It's kind of consolidating right now, but you have a situation now where you're having green weeks, green months, green quarters, and it's slowly making its way higher. Let's talk about a more of a bearish name, MU, Micron. This one here I've been talking about as a potential short, so or as a shorting opportunity, not a potential short, but shorting opportunity. So on the monthly chart here, very quickly, outside and up, it runs broke below this low here. The low was right there. Let's make it blue, a little thicker so that we can see that better. There we go. That's too thick. Let's make it a little less thick than that. Okay, 40.77. Okay, so that's your short. Then that's just it's open season on that short because now it's coming through the other side of this pattern, and this is the pivot in play now. 36.57. They're going after that pivot there. Okay, and so Micron, great intraday shorting opportunities. This past week, outside, inside pattern there on the weekly chart and down, right? So you can short it all week long. Now the opportunity here is to catch this pivot low here, 36.57. Very high probable chance we're going to go after that pivot at some point. Let's talk about another chip name, which is a bit more bullish, but still you need to watch this name because AMD on the 3-month chart, it is close to going inside bar and up again. So here, 28.11 is the condition. Right now it's 27.96, right? So if it cracks back above 28.11, you have this inside bar back and forth again. On the weekly, you had this outside bar and down, but coming back up again, right? And now look, if you can break above this past week's high, that could flip things back into force on the 3-month chart, and you're going to go after that pivot there, which would make it a green month again. So you're in this bigger broadening formation. You can see here on the 2-day chart, it's coming back up to the range, right? So buyers are stepping back into AMD. The issue once again is a monthly high, right? So can they take it out, or does it act as a level of resistance? Because right now the month is obviously still red, inside month, so not bearish, right? But again, if it does break down, look at this, right? Outside and up, you do not want this thing to take out this area here, quarterly open and that low. If it does, bye AMD, you're gonna come back down to here again. Okay, so watch that AMD chart. It's very, very interesting to want to watch. One final name, we wrap it up early today, CRON. So CRON looking interesting here because on the CRON chart, 3-month chart, outside bar and up. Okay, that was last quarter. This quarter, inside bar right now. But it came down, it came all the way down here and tested the high of this breakout bar. So see the sequence here. This past quarter, come all the way down on Thursday to test this previous breakout. So the high of this is 13.95. Literally here, they went down to the low of this day, 13.90 to touch that. right? So now they pop it back up again. So now watch CRON. You have buyers stepping in here. You're still, red on the month though, so that's a bit of a red flag. But intermediate buyers are stepping in here because now you have an outside-inside pattern. New week coming up. This could be an interesting opportunity, very short term, as you're playing this range, this move back up through the range again. So there's your 4-hour chart, right? So there's your outside, inside. Then on Friday they bought it. So you see that they bought it, and now they're going back up, potentially back up through the range again. So we'll see if they can take out those monthly highs. All right, so keep your eyes on Twitter, and make sure that you stay flexible with your ideas. At this point, you have the pace to be nimble and agile, and just ask yourself the question, right? Would you rather be a soldier right now or a scout? Think about that question. Do you really want to die for your trade ideas, or can you be a little bit more fleet-footed and not take the big risks because of the kind of the fluid nature of things right now? All right, have a great week and happy trading.